Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for April 30th, 2023. I want to say it's nice to be back with you all, but I want to say just a special thank you to Greg Horvat. He's our Elliott Wave analyst for the Forex Analytics platform. He has spent the last 2 weekends with you, and I want to thank him for doing that. I was traveling out of town, so it's nice to have him here, and he was giving you a nice Elliott Wave look of all the markets. He is our in-house Elliott Wave analyst that'll provide analysis for 30 different instruments that you see here. I got a lot to talk about this week because what happened last week, but what's coming ahead. But before I get into that, I have to say this. We are probably due for a lot of volatility. A couple reasons why. We have seasonally, we're going into the May time frame of the year, the May month. Sell in May, go away. It's we'll take a look at what May did last year, but we should see increased volatility this time of year from a seasonality point of view. Also, if you haven't been following, the debt ceiling debate is going to start getting heated up in the weeks ahead, and that is a big fear for a lot of investors. So with this increased volatility, why not take advantage of trading our money, risking our money, not your own money, risk our money. You should check out the Trader Funding Program. You can get to the link just down below in the video description here. The reason why I say this is because with this increased volatility, why not take advantage of it by accessing larger amounts of capital, but our capital, all right? Take an assessment, see if you can qualify. As of this week, we have increased our payouts. If you decide to increase your payouts from 75% of your gains to 90%, it's an addition that you can consider when you take the Trader Funding Program. But you can trade up to $1 million account of ours without taking any of the risk. You just have to pass an assessment. So to learn more about it, check out the Trader Funding Program. One of the benefits of being part of the Trader Funding Program is you're inside of the Forex Analytics community. I'm going to give you an example. This is our general chat room on the night that the Bank of Japan made their decision on interest rates, which was historic. We're going to talk about it here in a second. We're going to look at some of the price action, but you can see the coverage that we had in Asian trading throughout the BOJ. There's our team members were there. Lots of traders were around. Price action was all over the place. It was a really volatile time of the market. But the reason why I'm pointing this out is because no matter if you're in if you're in our chat room, you're in the general chat room, you're in the S&P room, you're in the trades room over here, the Flowonomics or the macro chat room, you have ideas when you're in the Trader Funding Program, because when you're in the Trader Funding Program, we want you in our community because we want you to succeed. We want you to be able to make money not only for yourself, but also for the firm. So we want to make sure that you have some ideas. So you'll have access to Forex Analytics and our community for a period of time based on which assessment you take. So check it out. All right, enough about that. Let's get into the markets and let's get into what's happened, and let's start off with the BOJ. I'm just going to go ahead and start off there because I will tell you for me, I was actually positioned the other way. Now, thinking Ueda may make a little bit of a change to monetary policy. He did not, and you can see the squeeze that happened after that. But it's really important, and by the way, I'll be doing a lot of drawing here because I haven't drawn on these charts in a couple of weeks. I do this here for you, with you, on these shows so you can kind of see the development process of the markets. If you take this trend line, let's move it all the way out here, and then let's take another line here, and let's draw and connect these highs. You'll notice that we're kind of breaking out of this triangle. The thing about the dollar yen, and you have to imagine what has happened here, and this is something that my colleague K-Man, he mentioned on Friday during the free F.A.C.E show and during the European show, the Flow show, is that a lot of people were poorly positioned, whether it's retail, whether it's bank traders. A lot of banks, almost every bank, was universally looking for a lower dollar yen exchange rate or stronger yen. So when you have a Bank of Japan that that looks like they're going to really push things off until the next. Even though they removed some of the verbiage from their statement, it looks like they're going to take their time, and there might not be a move on yield curve control until the next meeting. The yen is a big carry trade, so you had to have a lot of traders getting out of their dollar yen, euro yen, mex yen, maybe positions that they had, and put those carry trades back on. And people that were fading it had to take them off because they don't want to get that counter carry for the next couple of months before the next BOJ meeting. So we've seen this dollar yen move higher, and plus it was also the end of the month. So now notice where the dollar yen is at. We're breaching this, what I think is triangle resistance. Now it could also be like this, guys. It doesn't, what I draw is not necessarily set in stone. We could actually have more of a symmetrical triangle and maybe have a little bit further to go on Monday morning. The reason why I say that is because if you zoom in and you look at some of the fib levels, yeah, we're reaching for the 78% retracement. There's an 88% retracement, the last kind of line of defense for the bears here. That's going to come in, real close to 137. That seems very logical for a place for us to get to. But I want to show you something else. If you look at an extension of just this last move lower, we're also at the 161% extension. So I would assume that this area provides some resistance as we go into the beginning of the next week. Now, a lot of people have been looking at the euro yen, and obviously the euro yen's, we're seeing levels we haven't seen since 2014. If you look at this high here, we haven't seen these levels since then. Now, here's the problem that I have with the euro yen. Also, if you take a look at some of these Fibonacci extensions, this is another golden fib that reaches right up to this area. Now, you might say, well, Blake, we closed in breakout territory. We did. But what's to say that we don't have a false breakout? If you get everybody scurrying at the end of the month, following the BOJ, you get all the shorts covering, and you get, like myself, I got stopped out of some trades on Thursday night after I went to bed. At least I knew where my risk was, right? But when you get people getting stopped out, you get traders getting long, you get institutions repositioning themselves. When everybody takes a step back and they look around, they go, well, the BOJ did remove some of the verbiage here. They can make a decision at any point. It doesn't look like they're going to keep rates low forever. They might make adjustments to yield curve control. And you have people thinking about this over the weekend. You might have some buyers of yen coming back in early next week. And being that we're at such key levels here on like the euro yen, like I pointed out with the dollar yen, and even if you look at the Aussie yen, which if you want to look at that, we'll look at that actually towards the end of the show. So make sure you all stick around because it is something that I am watching very carefully. Anyway, if we get a reversal in the yen early next week, this could end up being a false breakout. So, we're up against a lot of resistance. A lot of people talking about the euro yen, a lot of people talking about the yen in general. But remember, the BOJ is making steps towards trying to normalize policy. And as a result, the yen should start to strengthen at some point. Okay, so just think about that as we move along. All right, we're going to continue on with analysis. Let's go into the S&P. Now, the S&P rallying right into resistance. Really, I had a couple people say, hey, last year we're at the same level. You're right. Last year, if you look at May or May 1st, really, right here, we're pretty much at the same spot, right? Same pivotal level around 4,200. Now, you'll notice that after, well, that was this is 2021. If you go to May of 2022, which would be right about here, right here. Okay. May of 2022, you can see we're really at the same spot. So 2001, 21, 22, here we are, really around 4,200. Very pivotal level for the market, all in all. Now, keep that in mind as we go into a seasonally rougher period for the markets. Now, I'm assuming that Monday, you're probably going to see some buying come in the market. You can call it mutual fund Monday. You get people plowing into the market after the weekend, and then you get your turnaround Tuesday, the following day. this could be one of those setups where we're heading right into some really stiff resistance going into a seasonally very tough time of the year. Now, let's not forget that it's not just seasonality. We also have some big economic data coming up this week. Not only do we have all the ISM data, the ADP data, we have the jobs data at the end of the week. We have our FOMC meeting happening on Wednesday. So it's going to be a big week, not only of economic data, but of, we got central bank meetings. We even have the Norges Central Bank that's meeting on interest rates the following day. So, there's going to be a lot of volatility this week. That's why you should be checking out the trader funding program, right? Right. Oh, I had to plug that. Let me get back into the charts. Okay. So here's the S&P right into resistance. Okay. And, we're going to have to see how we pivot around these levels. Personally, I think this 4,200 level is going to be really big. And the reason why I say that is in order to keep, the trends intact, you want to make sure you have, lower highs, lower lows. That would be a downtrend. Higher highs, higher lows is an uptrend. We're actually making higher lows right now. So a higher high, if we break above 4,200, from a trend perspective, that actually says a lot. Now, I know that we're in a period of where the Fed might stop hiking rates this week. They might raise another 0.25%. That's what the market believes. And then the Fed's going to stop. But will they leave the door open for more rate hikes? And will the market respond to that? Because if the Fed doesn't let us know or suggest that they are going to keep rates level here for quite some time and kind of reassess now that they've raised rates. But if they leave that door open for further rate hikes, depending on economic data, the market might not like that. So that's something that we have to pay attention to as we go into Wednesday. Now, it's not just the S&P that I'm looking at. Obviously, you can look at other markets too. Let's take a look at the NASDAQ really quick. The NASDAQ, we're at trend highs, but I would say it's really underperforming the equity markets overall. We're in between like a 38% retracement and a 50% retracement, but we are at resistance, as you can see that, and we are trying to break higher. The Dow also right at resistance as well. But you can see the Dow actually is holding up a little bit better than the NASDAQ, obviously. And then we got to pay attention to the Russell. It looks like, I think it was First Republic got seized on Friday after the market. There's going to be some fears in other regional banks. That's probably tell you why the Russell 2000 is really underperforming. What I would be focused on is really watching like this trend line right here, or these recent lows in the Russell. If the Russell starts breaking down, I always use the analogy of domino effect. If you start to see the Russell break down, what other markets is it really going to affect? Are you going to see the Dow, maybe the S&P, the NASDAQ, and it's kind of like the dominoes hitting each other. So watch that Russell 2000. I think that's going to be fairly important. All right. One of the other things I wanted to point out before I get into some of the FX pairs is I want to talk a little bit about the bond market. And, if you look at yields, and this is just the inverse chart, right? You got the 10-year notes right here, but you got the 10-year yields, which is the inverse, right? If I was worried about banks and I was worried about the general health of the economy, why not take advantage of, 10-year notes trading at 3.4%? And why don't I just lock that in? From a safety risk off point of view. And I think that's one of the things that's keeping yields, under pressure, is because people are like, well, I'm going to buy some 10-year notes, which makes a lot of sense to me. Now, what happens if bonds start to rally and you start to see yields sell off? Well, then you might have that knock-on effect where now everybody's reposition themselves in the yen. You might just see the dollar yen, which is a very, very, here, let's just go ahead and do this. Let me add the dollar yen here. You can see very strong relationship with the dollar yen and yields. Now, obviously the dollar yen, which is in turquoise here, it's moved a lot because of the BOJ. But now that we've kind of got that out of the way, anybody that needed to get squeezed, got squeezed. Institutions reposition themselves. They did that at the end of the week, it's also end of the month. All that's out of the way. Now, if yields start to fall, which they look vulnerable, right? If bonds catch a bid, yields start to fall, will the dollar yen follow suit? And that's the one thing that I think we should all be paying attention to as we go into next week as well, especially if you're following the bond market, which you should be, especially right now, especially with everything that's happening this next week. All right, let's continue on. Let me go ahead and get rid of, you don't need to see me. All right, let's continue on, and let's go into what's happening in gold. I haven't been with you guys in a while, so I want to talk about this a little bit. So gold, if you haven't noticed, it's actually creating an ascending wedge, or excuse me, an ascending channel, and we're just pivoting off channel support. I think you've got to stay bullish while you're above here, which is 1960. That's the breakout point. You get much below that, I think anybody who's bullish is going to be nervous. But also keep in mind, and let's get rid of this, you can connect a trend line from all of these highs right here, from the all-time high and to these highs to right where you're at there. That's going to take us to about 2060, I think 2060, 2065. That's really big resistance for the market. 161% extensions, not too far away from there. Channel resistance. If you are a buyer of gold, you've got to be looking at these charts thinking, okay, a breakout's probably looming above 2070, 2080, obviously, once you get into all-time highs. But it is, from a risk reward perspective, you're putting on new long trades right here. You want some evidence. You want some evidence of why I should be buying this, whether it's a yield trade, whether it's an inverse dollar trade, whatever it is. Keep an eye on gold. It's going to be pretty pivotal, I think, this week, especially coming into the FOMC. Speaking of which, let's go ahead and take a look at the dollar index as a whole. The dollar I do worry about. The dollar is right around very key support. Let's go ahead and move this trend line. Let's move it down here. You can see we're, for all intents and purposes, we're developing some sort of bearish wedge. Why is it a bearish wedge? Because when you have lower highs and consistent lows, that's a wedge. And, that means that the probabilities at this point in time is that we break down. And if you look at what the sterling's doing, what the cable is doing, the cable is actually breaking out to the upside. As it breaks out to the upside, we're about ready to challenge 127% extension. Warned a lot of people this week that the fact was that the cable was not pulling back, and because it's not pulling back, chances are we're going to be moving higher next, and that's looks like what we're doing right now. We actually closed it in breakout territory, and if that continues, you see the euro just kind of chugging along at this with this weekly breakout, and you can see this actually looks pretty much like, you can argue here that this looks very much like a cup and handle pattern. And a cup and handle pattern should resolve itself to the upside, right? So you look at charts like the cable, like the euro, they all look primed for an upside breakout in those pairs. That would equate to a bearish breakdown in the dollar index if all that comes to fruition. Now, there's a lot more I could talk about, today, but I'm not going to. And the reason why I'm not going to is because every single day we cover all of this live on the Flow Show. That's our European show, which will not be broadcasting on Monday since it is a holiday. It's May Day in the UK, and it's a holiday throughout a lot of Europe on Monday. But we will be broadcasting the F.A.C.E show on Monday. So make sure you catch us there, and make sure you catch me there, because it's not just me. It's the rest of the Forex analytics team. We broadcast, we talk about our current views, because things change. Every day the markets change. So make sure you take advantage of the trader funding program. Trader funding program. Take advantage of the new payouts that we are going to be introducing. Well, we actually started them on Friday. All the verbiage is getting changed this next week. So make sure you check that out. And I want to say it's nice to be back with you all this week. I've missed you the last 2 weekends. I hope you're all having a great weekend. My name is Blake Morrow. I'll see you Monday morning on the F.A.C.E show. You all have a wonderful, wonderful remainder of your week. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.